Well, in personal finance has evolved so much from the whole point being to have the most amount of wealth possible. It's gone from the save, save, save mentality to more of a there isn't a right answer for everyone mindset. And there's actually a quote from your book that I wrote down I felt like was particularly impactful. It is, quote, "If the pandemic taught me anything, it's to value the present more than I once did and the future a bit less. We should invest in us in ways that go beyond money and to embrace both the present and the future," end quote. And I think this really encapsulates a lot of what I have seen, even over in my 15-year career, of the transition that personal finance has gone through to give people this type of advice.
I think that it's like dangerous territory for someone who is in the business of providing advice when you are all or nothing, like live only for now versus live only for the future. And I do think that when we examine the choices we make in our lives, and we know that every pretty big life decision has some financial ramification usually, I think what we learn is that we're trying to strike a balance. If somebody is watching this right now and is thinking like, I'm way out of whack. I had a great pandemic. I saved a lot of money. Then I spent too much money. And now I feel like I'm like into old patterns. Like, we want to strike a balance. This yo-yoing is really tough. And I think that if we build our plans that are flexible enough to change as we change, then we've got great opportunity to really let these things called financial plans be living, breathing documents. Nobody walks into a doctor's office day one. You're 21 years old or you're 18. You stop going to your family pediatrician and you're into like a real doctor. And you've got what's called a baseline, right? And I think the cool thing is that baseline is there, but it shifts. You get older. What's happening? How do we adapt this? How are you feeling? What's changed? And I think a really good financial planner is someone who you can work with to develop a plan that's breathing, that's living, that's not just some 100-page tome that you stick in the back of your desk. And that as you change and your life changes, you may have a weight more towards the present than the future. It may be that you say, I am willing to work longer if I can work a little bit more gently today. It may be that you're a killer and no matter what you do, you're going to kill it. And so in some respects, I always worry about people who are like, well, I'm going to go part-time. I'm like, are you? Because you really do seem like a complete workaholic. Like, I'm married to one. I get it. Like, you're not going to be like, I'm going to work 3 days a week. No, you're going to get paid 3/5 and work exactly those same, 70 hours a week. I get it. So there are some people who are actually built that way. There are others who are just plain old exhausted. Talk to a teacher. Talk to someone in the medical field. Talk to people who have maybe burnt out a little bit and maybe need a little break and need to reassess what is the next step. And I think that you realize that there are a lot of ways to get to the end. And sometimes you need a nice gentle off-ramp, not a cliff, to get to some other desired place.
All these things that you're talking about in general, I would argue, are kind of in that column of things that you can control. The big thing that we can't control that I know your callers on your show will ask you about, or in your life as a chief investment officer like me, people want to have more control or certainty over the stock and bond market. And so I would love to transition off the book before we end and kind of pretend that I'm one of your callers, or pretend that you're still the chief investment officer, and ask you, just if I'm calling and I'm worried about the stock or bond market or both, what is it that you're telling people these days?
I mean, first of all, if you need the money within 12 or 24 months, you shouldn't be invested in anything risky. You can be in cash. That was like such a crazy thing to say to people when we were in a 0% interest environment, and people hated that advice. I was like, too bad. Like, you don't want your money at risk. That's the deal. And if you are going to put your money at risk, then we are talking about a longer term. Generally speaking, again, not to like belittle what I used to do or what you do, I just don't think the investing is all that important when you think about like the longer term. Your assets are going to do what they should do as long as you're not too crazy and you don't kind of emotionally jump in at the wrong times. You work with someone who's keeping costs down, has a diversified portfolio, maybe is rebalancing once a year in a taxable account or harvesting tax losses in a taxable account and not messing around too much even in your accounts that don't have any current taxation, that you're going to be fine. What is really important and the game-changing advice that people can get from their advisors is usually not about investing. It's about everything else. It's about, hey, you know what? You don't have enough insurance. Or, you know what? That is a crazy product you brought over from your old broker, and we're not keeping that. Or, you know what? You're 68 years old. We have 5 years before you need to start taking your required minimum distributions. We need to slowly convert some of your money that is in pre-tax retirement accounts and pay the tax today. Well, I don't want to pay the tax today. Okay, well, I'll tell you what I really can't control, where tax rates are going. Here's what I know today. They're really low. So maybe we're going to choose to pay taxes today. I can't imagine a time horizon of 10, 20, or 30 years where an investment advisor is going to be able to save you 10% in taxes because of when you choose to pay that tax. So these are the things I think that make a huge difference in a person's life. And most importantly, again, the investing is important mostly because we want to make sure people's money grows faster than the pace of inflation. It's not perfect. Last year sucked. I get it. I thought it sucked for me. It sucked for you. Doesn't really matter. And, as bad as that was, if you had a diversified portfolio, even if your bonds got creamed, you still did better than having 100% of your money in stocks. And for everybody who is all excited about the markets in, essentially in 2019 and 2020 and 2021, I can tell you that's when I'm the most nervous. And that's when I talk to people who are incapable of selling an individual stock, or the people who I talk to at Salesforce or Amazon or Apple and all these companies that were, couldn't lose. And they had scads of money sitting in their company stock only to find out that, yes, Virginia, those stocks can sell off too. So no one is immune from it. We learn lessons every day. But if you're really clear-eyed and you say, look, I'm having a reaction about this thing called a market movement. I get that I have that reaction. However, I'm not going to do anything about it. And that's where I think the value of working with someone does come in, because people can talk to you and say, hey, man, I'm freaking. Calm me down so I don't pull all my money out. That's the value of you. As someone once said to me when I was managing money, they said, really, you're like my insurance policy against shooting myself in the foot. And I was like, yeah, okay, fine. I'm happy to be that.
Jill, you and I have very similar views on that. And I always joke that I'm going to put myself out of a job by saying, hey, all this stuff that you're worried about is mostly noise. And if you're worried about the market, the very first thing you ought to do is look at the financial plan that you've built for yourself and not your portfolio. And if you don't have a financial plan, maybe it's time to look into one.